One of the biggest complaints I hear from entrepreneurs is that they have no idea what accountants are talking about and finances are scary and they just avoid it altogether. And this is so common. I call it the finance scaries, and I want to help with that however I can. So definitely watch these videos, but also join my Discord community that I've made for entrepreneurs, where you can ask me questions and start dialogue and get that knowledge up where it needs to be. In this video, I'm going to talk about the balance sheet. The balance sheet is kind of the lesser known financial statement. People are a little more aware of the income statement, whether or not it's an official, financial system generated income statement, or they're just kind of manually in Excel calculating what they, the revenue minus their expenses to get their income. That is a little more well known. The balance sheet is the other statement that is always compiled at tax time. Think of a house that is owned, and one side of the balance sheet is assets. So in the case of a house, it would be the home. That is the asset. The other side of the balance sheet is split up into two categories: your liabilities and your equity. So in the case of a home, your liability would be your mortgage, what you owe to the bank for your home. And then the difference between the value of the asset and what you owe on the asset is your equity. And so the same does apply to businesses. So assets are on one side of the balance sheet. Obviously, both sides have to balance, hence the name. Super creative. So the assets for a business would be, any cash investments. The current assets are any assets that can be turned to cash or will be turned to cash within a year. Your accounts receivable. So if you've done work, you've billed a customer, but you don't yet have the cash in hand, that is a line item on the balance sheet. Any equipment you own, your computers, anything that you have purchased that is going to help your business earn income for over a long period of time, that is that's on your asset side as well. And then, there's lots of different types of assets. And if you have any questions about that, you can put them in the comments. The other side is, again, like, how leveraged is your business? How much of your business is what you own in equity, and how much is funded by lines of credit or mortgages or like bank loans. Liabilities are also what you owe your suppliers, for example. So you manufacture something, you get shipments of the raw materials, you get billed for those raw materials, you put them into your accounting system. Whether or not you pay them right away, like if you don't pay them right away, they sit on your accounts payable. That's what you owe other people. So your other side of the balance sheet is everything you owe everybody, and the difference is the owner's equity, which is, if you go back to the income statement video, that is your after-tax net income that is put into the balance sheet, essentially, as like, okay, we've earned this. This is our equity. And so why the balance sheet is important, it's not as important to the day-to-day, but for growth in your business, if you do need to get loans, or if you get audited, or any sort of other party is coming in to like assess your business to see if are we gonna like loan to this company, they're gonna look at your debt to equity ratio. They look at how leveraged you already are. If you're running low on money and you need a loan, and you go to the bank and you give them your financial statements, and you have like a negative equity, and you have so much debt, like if you like, they're probably not gonna loan to you. So, and also if you have debt, a lot of the time there's like covenants on that, so you have to keep those ratios under a certain amount. You can't just go get loans from a whole bunch of different places. They're saying, no, you have to like make sure that you're not too leveraged, because we want to get our money back. So there's just a whole bunch of things that when it comes to growing your business that are determined by your balance sheet. And the balance sheet is where a lot of adjustments happen to account for things that may not necessarily have an actual transaction, but are things that are going to happen, or commitments that have been made but haven't actually, been billed or whatever. So that is the balance sheet. If you have any questions about that, let me know.